Hey there, welcome to the channel. So we have the worst first half to a trading year in 50 years. Oh boy. All right, so let's take a look at what happened with the SPY. Down a little bit, not too much really of a down day, but it is just following through on the fact that we're kind of really seem to be in a bear market here for sure. And yeah, so that looks kind of like dog poo on a stick. It's kind of interesting here how, like, if you look at these, just looking at this chart, you can kind of see that you're kind of going down. We can kind of see that we have, sort of looks like, yeah, downtrend, definitely for sure, blah, blah, blah. But, another interesting thing here too, looking at this, staring at things, it's interesting how you have these big up weeks. So it's on a weekly, big up week, and then a bunch of weeks down. And then you have another big up week, and then you go down, and then you have another up week, and then you start kind of like starting to wane. So it's kind of interesting how they kind of seem to, what seems to be happening, and this is speculation, is what happens is, these up weeks that you do have is like all the buying gets concentrated into a week, and then the buying peters out and the market just fades it. That's kind of what you see. And I would speculate that that's kind of what you would get in a bear market, because once again, in a bear market, and you're at this stage of it, there's no base yet, there's none of that. Yeah, things are off, but there's a lot of uncertainty. So who's holding what? People are holding short positions. They're liable to want to get out of those short positions because if it starts moving against them, they want to just lock in their profits, and they're willing to kind of do that almost at any cost, because you're infinitely exposed. You've borrowed the shares and you have to return them at any cost. So if things go crazy on you, which they can sometimes, you don't want to be holding them. So let's look at a couple other things. Let's look at our Bitcoin. We're going to head over to man, look at that Bitcoin. Just another kind of a bad day today on the Bitcoin. Look at that thing. It just had a bad day today, and down 6% today. And what's really important is that it's pressing back down to that 18,000. And so my guess would be that it is not done going down. And so Bitcoin is just, the big daddy is going for the floor here. Grayscale Bitcoin, Bitscale Trust, yeah, same thing. 10-year off a little bit, kind of interesting to see how the 10-year could actually come off a little bit here. And look at our Tesla, kind of just in consolidation, whatever. But let's see, let's look at Voyager Digital. Now, this is kind of interesting. So Voyager Digital, they have this issue where they had made a loan to one of these other companies that is like apparently defaulting on the loan. So I don't know why they started going up, but they're just in kind of a mess right there. So, okay, let's switch over to the crypto thing. All right. So we have this crypto hedge fund. Three Arrows Capital plunges as it goes into liquidation. Okay, so what's happening here is, it sounds like this is what's being reported on CNBC, that Three Arrows is this crypto hedge fund. They're basically going into restructuring. So they had all these problems, they had all this money that they had lent out, and right now it's being reported that it's going into restructuring. Then we also have this other one here that's kind of interesting. We have this CoinFlex. This is another one of these crypto exchange. CoinFlex won't resume withdrawals Thursday. So that seems, now what's really interesting about this particular one is, so now they're naming the guy. They're naming this guy that apparently owes them $47 million, a $47 million loan. But here's what's really interesting about it. To fix the $47 million hole in CoinFlex's balance sheet, the company is issuing a token called Recovery Value USD, called RVUSD, and enticing investors with a 20% interest rate. Yeah, really? We'll get back to that one. And then another interesting thing today that is reported is that EU agrees to landmark regulation to clean up the crypto wild west. And, this is something that it's already too late, right? The cryptos are imploding. They leverage the crap out of them. They've stable coins, all this stuff, they're trying to get in there and regulate. But I think at this point, much of this is not going to exist to be regulated for very much longer. So let's take a look over at some of this summary there. So here's my running total of trying to understand like what's happening with companies. So we had, Celsius halt transfers, Binance halt then resume transfers. I haven't heard anything else, whether they, continue that kind of thing. We have really the big one is the Three Arrows Capital. So they're reported to be in liquidation. But what's interesting, they had taken a loan of 675 million from Voyager Digital. Now, okay, so now we have it spreading. So they get this loan from Voyager Digital, and we saw the Voyager Digital chart had gone to like the floor. However, in the last couple of days, it kind of bounced a little bit. So very interesting there. So this one looks like it's going bye-bye, and Voyager, it should be really taking a hit on Voyager Digital as well, because this guy over here is like, look, apparently it's something like 670 million in Bitcoin stablecoin, and they haven't gotten it back as far as we know. Now, what's interesting is they also got another loan in Bitcoin stablecoin from Alameda Research, 200 million. So maybe that's keeping them afloat right now. But as of I know has been reported, they're still with limiting customer withdrawals. And then going to another one, there's this thing called CoinFlex, and this is another exchange. And this is the one that reportedly is like they're issuing 47 million in new recovery USD coin. So, okay, so this one is just crazy cuckoo. Okay, so you're a company, you're an exchange, and you're a company, and you basically have to margin call someone. Something's gone wrong and you have to margin call them. And that customer defaults and says, well, no, sorry, I can't pay you. So you're out $47 million. So what do you do? What do you do? Like if you were a brokerage, if you were like TD Ameritrade or even a Robinhood or some other exchange that was dealing with stocks, what would you have to do? You'd have to get funding from a bank or a real world entity, and you would have to get that funding in dollars, right? You would have to get actual real funding to plug the hole in your balance sheet, right? So you basically have to come up with a loan, a floor plan, some kind of loan or something to, not the whole 47 mil, but enough to make sure that you're solvent. Well, what does this CoinFlex do? They issue a new, I mean, this is insane. Is it just me? Am I stupid? Maybe I am, but like they just making up their own money. They create a new coin and they call it, recovery USD coin, to plug the hole in their balance sheet. And then what they do is as they reported in that article, they're offering 20% on this. So this is what has gotten crypto into the problem in the first place. Think about it. The first place, what is the problem with crypto? Crypto on its own, there's no issue, right? There's no liability. There's no counterparty risk in Bitcoin on its own. But that's not what we're talking about. We're talking about people have taken Bitcoin, they've loaned it, lent it, and leveraged the crap out of it, such now there's counterparty risk. So now we have a situation, Three Arrows Capital has a counterparty Voyager. So Voyager is like, okay, Voyager is double screwed because Voyager basically got screwed out of 670 mil from these guys, and they had to get a loan from another company. And if things go bad over here at Voyager, then this Alameda, you see how this spreads? Because I owe you, you owe this, you owe that. And the next thing you know, everyone's just owing in everyone else's pocket. And once one person can't pay, the whole chain of defaults just spreads. And that's exactly what you're seeing. But back to this is insane to me. How can you just be like, my response is to the fact that I may have solvency issues and troubles. I'm 47 million in the hole. I'm going to just make up a new coin. And then on top of that, I'm going to promise that this is what they're reporting. What they're saying is they are promising 20% interest on that. So think about it. That is what the problem is. You've been over the last decade a very low rate interest environment, and therefore if you're looking at a treasury, which is a safe asset, and it's been paying 1%, 2% for the last however many years, and someone promises you twice that, 5%, they promise you 10%, 13%, 20%, what are they doing with that money? You know they have to leverage it up. They have to leverage it up, and therefore they're taking risk. At a minimum, they have to take risk. That means the chances of you getting your money back, especially in this environment, is at risk. It's very low. So I find it amazing that these guys have the gall the gall to be like, I'm going to create a new coin to plug the hole in my balance sheet, and I'm going to make promises that I cannot keep. I cannot keep that promise of making 20%, paying 20% on that money. There's no way. Where are you going to go? You have to go find someone else to go and do yield harvesting and leverage the thing up. It makes no sense. Oh my gosh, these people are crazy. Now, one more thing. We've been here before, and I want to show you this. Okay, back in the day, back in the period that the movie The Big Short was made about, when in the great financial crisis in 07, 08, when all the mortgage lenders were starting to go, some dude created this page called ML Imploded. So it's the Mortgage Lender Implodomeal site. Implodometer. And what this dude did is he started just tracing, like, okay, every time someone goes bankrupt, they were just, recording them and what happened. And if you look at this list, so what you will see here is you will see, going back to some of the early ones, you basically had small guys and there weren't big guys, but they started going bust one after another. And then you have some of the big guys, New Century Financial. That was one of the big ones, and The Big Short. Some of these really big ones went, but the point is, it just spread. At point, some of these, like I think New Century was at the very beginning of it. If you look here at this list, it was only number 35. Now, other ones may have already been indicating they were having trouble. I don't know when they usually put it up here when they started to do it. So the point is, I'm looking at a list. I'm seeing like 5, 6, 7 companies, crypto exchanges that are having issues right now that we know about. If you go back to that period of time where the mortgage lender situation was going kapoofy, you're talking like, look, 35, and stuff. And then look, at the end of the day, you're talking 300. And I'm sure some of this maybe you can debate some of it, but the point is you're pushing the number 400. So my point is with crypto, my point is that if you're looking at these guys and you're thinking that we can just get through this and we can, and it won't spread or won't cause anything, I think the probability is very low. We've been here before. Mortgage lending at that time, there were all these new loans. It was this new, both on the social end, where, hey, we're going to create loan products for people that otherwise would not qualify. Okay. And then also on the technology end, they're going to start pushing the financial engineering of the products to the point where you just create this machine where you just like lend, refi, boom, 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 and stack and pack these things, bundle them up in the mortgage-backed securities, CDO squared, and Wall Street turned into this machine for processing, in creating mortgage financial related instruments. And so what was happening then and what's happening now is no different. Now, I would say that the crypto situation is even worse, because when you get back down into the financial crisis of, at the bottom of a lot of that stuff, there were mortgages with actual properties. Now, not all of it, but in a lot of it, a basic mortgage-backed security, yes, there's a property down there at some point. There's some residual something. There's something there, right? Now, when you get up to CDO squared, where, they're tranche and they're splitting these up, I mean, you could debate there may, in fact, in a lot of those cases, there may have been nothing there. It might have been just paper, because there's so many levels removed from the actual property. But in terms of the mortgage-backed thing, there was something there. Now, what is the situation with stablecoins? What is the situation with Bitcoin? There's nothing there. There's nothing underneath it. There's just like, there's nothing under there. And the fact is that, hey, whether whether Bitcoin represents, the 5 years of output of a nuclear power plant to create that, there's still nothing there. And there's an infinite supply. As we see here, this company is just like, oh, we have a problem, CoinFlex. Oh, we're going to create a new coin, coin. So there is no scarcity at all. There is no underlying asset. There's nothing there. And it's extraordinarily important to understand that the technology, you're not buying the technology. When you buy a Bitcoin, when you buy a stable coin, you're not buying blockchain. A blockchain is just the tool that is used to trade, transfer, create, and deal with the with the coin. But it's not the technology. It's not like, oh, if I bought Bitcoin, I have a stake in the blockchain chain. No, you don't. You don't have anything. You have nothing. You have no asset. And the key thing is, there are companies that have the technology, the blockchain, and some of those will go on to be billion-dollar companies. There will be companies that will go forward and be like, oh, we perfected the blockchain and how we can use this to record real estate transaction, business transactions, this, that, tracking parts for, planes and things, 100 million different things. There's going to be companies that are going to make billions on it, but you ain't going to make it by buying Bitcoin. All right, so listen, that's it. I think so. I'll call it a clown world. I'm borrowing that from this Alex, whatever guy from the Duran. But the clown world is that someone defaults on you for $47 million, and your response is to create a new crypto to fill the hole and promise an unrealistic 20% return to people who buy it. Oy vey.